Welcome to another video. Today I'll be talking about the problems with crypto lending sites. So if you are thinking to earn interest on your Bitcoin or simply lend money and deposit crypto as collateral, this video is for you. My name is Jakub from P2P Empire, and here on this channel we review individual P2P lending sites and educate you about all of the aspects of P2P lending. If your goal is to become a more educated investor, consider subscribing and hit the like button to see more videos like this in the future. Due to the current crypto hype, there are many new emerging platforms that try to profit from the industry. Before we dive deeper into this topic, I want you to first understand the process of crypto lending. There are different investment products within the crypto lending industry. However, to keep it simple, we can define crypto lending as an alternative investment form where investors lend fiat money or cryptocurrencies to other borrowers in exchange for interest. The crypto lending platform is the facilitator of the transaction between the investor and the borrower. It's basically a middleman that sets the rules. The process for the investor is quite straightforward. You deposit your funds to the crypto lending platform, choose one of the offered investment products, and invest in loans that are secured by crypto collateral. The borrowers repay the principal amount with the interest back to your account. The collateral offered by the borrower is always at least twice as high as the loan amount. We call this metric loan to value, or the better acronym for it is LTV. As you know, the value of digital assets like cryptocurrencies is very volatile, which is why the P2P crypto platform sells the collateral as soon as it reaches a certain threshold, which is typically around the LTV of 90%. That way, your investment is always protected. Not bad, huh? It almost feels like you as an investor can't lose money. Well, wait for it. The best is yet to come. The crypto lending platforms often offer an interest between 5 and 10%. It obviously depends on the cryptocurrency you are depositing as well as on the desired liquidity. If you want to be able to withdraw your money anytime, you will get a lower interest rate. But still, earning 5 to 10% interest while being able to withdraw your money anytime sounds like a dream, right? Well, we have reviewed some of the crypto lending platforms in more detail, so let's have a look at what this fuss is really about. The first crypto lending platform we're gonna be talking about is Coinloan. Overall, the site looks quite legit. As you can see, Coinloan promises safe investments as they collaborate with insured custodian. Let's first check who's behind the platform. So let's navigate to the About Us page to find out. So here it says we are Coinloan. Upon scrolling down the page, the only info you get is that the platform is from Estonia. There is no information about the founders or the team behind the platform. So we dug deeper just to find out that the CEO is Alex Valyushin and the CTO is Max Sapelov. Why is this not represented on the platform? Well, we don't know. As there is no presentation of the team on Coinloan's website, you should pay good attention to the terms and conditions. So first of all, Coinloan doesn't publicly describe how your funds are stored. Only when transferring your funds, you will notice that they are stored at Buildering's bank account. Builderings is however not a bank, but an institution with an electronic money license. In the terms and conditions under the section 5.19, you can read that Coinloan shall not be liable for the inability to transfer funds due to the force majeure circumstances, including unforeseeable and uncontrollable changes in the field of electronic payments or cryptocurrency turnover, or relevant changes to the application legislation. Well, you can guess what this means. As the description is very broad, they could in theory deny your withdrawal with any made-up reasons. Coinloan is also promoting an interest account, which might create the impression that your money is somehow protected by some kind of a deposit protection scheme. Well, don't kid yourself. In the terms and conditions, you can read that you are not covered by any insurance against losses. Last but not least, Coinloan can also amend the terms and conditions at its own discretion at any time prior to sending you a notice about it. That's quite a red flag, as this can really affect your investments on this platform. In fact, we have not seen any platform that is not regulated where the changes in terms and conditions had a positive effect on the investors. Last year, we even deposited some of the money on Coinloan to just see how it works, and it did not. Coinloan offers you two investment products, the interest account and the option to create a loan offer. We created a loan offer, and even after 2 weeks our money was not invested. So we decided to withdraw our money from Coinloan. While the platform's interface is quite developed and modern looking, the transparency of the platform raises significant concerns which you should certainly keep in mind. Another amazing crypto lending platform is Nexo. Nexo is funded through Credissimo, a Bulgarian payday loan company. The CEO and co-founder of Nexo is Anthony Trenchev, who often shares his Bitcoin predictions on Bloomberg, and the second co-founder of Nexo is Kosta Kanchev, who is also the co-founder of Credissimo. Having the face of the CEO on the platform is certainly a positive factor. If you, however, want to look up statistical data, you will be disappointed as there is none available. Last year, we sent an extensive questionnaire to Nexo with questions relevant to their business operations. Unfortunately, they never got back to us with the answers. If you scroll down to the footer of the page, you can read that Nexo is licensed and regulated. If you wonder by who, you have to do your own independent research, as this is not represented on the website. We found out that Nexo has a financial institution license in Estonia, which is, however, not a lending license. If you want to find out Nexo's corporate address, you won't find it on Nexo's website. Don't you think it's odd that a company which apparently has more than 1 million users and manages $4 billion doesn't even disclose the corporate address on their website? Just leave your thoughts on this in the comments below this video. According to some external sources, we found branches in Switzerland, Estonia, and in the UK. There are multiple companies connected to Nexo, including Nexo Capital Inc., which is a company registered in the Cayman Islands from which the token sale was conducted. If you read the terms and conditions, you won't find much info about how your funds are stored. As you could expect, Nexo makes it also clear that they are not liable for anything arising from using Nexo, which basically means that they are not liable for your losses. If you ever think of borrowing money on Nexo, you should certainly rethink the security of your collateral. It has happened in the past that when a cryptocurrency plummeted, the collateral was liquidated in a matter of minutes. This makes borrowing money with crypto as a collateral quite useless. Let's move to the third and last crypto lending platform, which we'll have a brief look at. MyConstant is similar to the earlier mentioned platforms. You can either invest in crypto-backed loans or deposit crypto in order to borrow money. When browsing through the homepage, you will see an excellent Trustpilot rating, which, as you know, is not really something you should primarily rely on. When you browse some of the product pages on MyConstant, you will likely see many comparisons to savings accounts. For the average investor, it may seem like Constant is providing a type of a savings account. You should, however, read the footer where it clearly says that Constant is not a bank and it's also not a regulated financial institution. The comparison to savings accounts is therefore misleading at best. A positive comment goes certainly towards the statistics page, which looks much better than many statistics pages of traditional P2P lending sites. Constant must have released that statistics page sometimes within the past few months, as the platform did not have any publicly available data back in early 2020. If you want to find out who's behind the platform, you will be disappointed, as Constant does not share any information about the founder or the CEO. Some external sources mention the name Zonchu, but unfortunately we haven't been able to find any LinkedIn profile or even a picture on Google. We reached out to Constant and brought up the lack of transparency. Their answer was that they used to have a bio page, but apparently it sent the wrong message to the team, that some people deserve more recognition than others, which is why they took it down. I don't know about you, but having at least a portrait picture of the person who runs a P2P platform that claims to manage investments worth more than $67 million is the least you can do to build trust with your audience. But let me know in the comments below what you think. Do you believe that a crypto lending platform should at least introduce the founder or the CEO of the company? When it comes to the terms and conditions of Constant, they can amend them at any time without prior notice. And of course, by using the platform, you agree that you might lose all of your money. So, what's the takeaway from this video? Crypto lending is, due to the lack of transparency, quite a risky segment within the P2P lending space. Those three mentioned platforms are just the tip of the iceberg, really. There are new crypto lending platforms popping up on a weekly basis. Those platforms typically lack proper support, or at least we have not gotten proper answers to our questions. Don't get me wrong, the idea of investing in crypto-backed loans is brilliant, but due to the lack of transparency, it's quite a risky investment for most of the retail investors. At the end of the day, you decide for yourself which is the best investment for you. The goal of this video is just to simply raise certain concerns when it comes to crypto lending platforms, which of course are not being mentioned by all of the crypto lending promoters. If you want to make money with crypto, trading it on a legitimate crypto exchange is much safer than sending it to some recently launched crypto lending platform in order to earn a little bit of interest. There are many scams in the crypto industry, and the risk of not being able to withdraw your money is often higher than you might think. But let me know your experiences with crypto lending platforms in the comments below. I'm quite curious to hear your thoughts on this one. So that's been it from me today. Thanks for watching, and I will catch you in the next video.